Welcome to the second video on how to use optionsanalysis.com. In the first video, we created some folders, created a trade, and saved it. In this video, we're going to create a trade in the past, watch what happens to it in backtest mode, adjust it, and see how the trade turns out. The stock we're going to be playing with is Johnson & Johnson, and we're going to go in the past to June 4th of 2012. To change the date on the website, you click on the date icon in the upper right date box. This pops up a calendar. Change it to the time frame you're interested in, which in my case is June 4th. And when you click the date, the website reloads with that date in the date box, and it has a gray background indicating you're not at the latest date. Note that if you log into Options Analysis early in the morning before the first update, you have to move the date to the current date approximately 30 to 45 minutes after the market opens to get it to change to the latest data. It does not do so automatically if you are already logged in. But we're now on June 4th. We're looking at Johnson & Johnson. We want to create a trade. Now there are many ways to do so, and this time I'm going to use the option chain. One way to get to the option chain is to click chain right here in the stock symbol box with J&J loaded in the stock symbol text box. We're going to want to do a July call option. When the chain loads, it does not load all the data. It loads the first couple of months of the data, and it does not load all the strikes. It gives an estimate of how many strikes are out there, forms a percentage to try to keep the page to load fast. We're going to be only looking at strikes 10 to 20% away from the current stock close, so we're going to change this number to 20%. And since we're not interested in the June options, just the July, we'll uncheck those boxes and click Update. The page reloads, and we are only looking at our July options, just a few strikes away up and down from the current stock close, which is here at 62.34. If we wanted to look at more stock data, we would click on the Show link shown here. This is what the stock's been doing. We can see that it was coming down and recently bounced. It's paying a dividend of about 3.77%. We're going to try to keep options analysis in the current window, so we're going to switch this default value from new window to this window. That is a setting you can change inside your general settings. And we're looking in the call options, and the call options are located here. The put options are located here. We're looking for an in-the-money option, 5 to 10% in the money. That gives us either the 60 strike or the 57.5 strike call option. The current IVs are low, from 14%, 20% to 25%. We also see the deltas are between around 80 for the 57.5 call option, closer to 70 for the other one. The first delta is the delta for the bid, which is this number. And the other delta, this is the delta for the bid, and the higher delta is the delta for the call. This is the mid-quote. We currently have mid-quotes turned on. So, to grab this call option, you put a 1 in the trade num box. Actually, we're going to go with 2. We want 2 call options to show you what happens if you use more than one. And we have 3 risk graphs we can choose from, as well as just bringing it to edits. I'm going to be using riskgraph02, which is our more advanced risk graph. It has more capability than this risk graph, but it's slower. But we're willing to put up with that right now. So our trade is loaded for Johnson & Johnson. I'm using the 3-quote view, which shows my natural, mid-quote, and optimistic results. Since I have more than one contract under num, it tries to decide what my common denominator is amongst all my legs and gives me my lowest common denominator trade, which in this case is the mid-quote divided by 2 trade. This is my entry debit of 5.23 for one contract in a call option that matches my entry price shown here, which is the average of the bid and asks shown here. If I try to get out of the trade by selling it at the bid, this is what I would lose. And if I was to manage to get out of the trade selling it at the ask, which would be very optimistic, this is what I would gain. This is the rate, my current rate of return based on an initial debit of $1,046. These are my Greeks. This is the 80 delta of one contract, 2 contracts about 160 delta. This is the gamma, which is the rate of change of delta. The vega, which is the rate of change of delta VIV, and theta, which is time value. As time goes by, the call loses money in its current location. This is the risk graph of the trade. Currently, the settings of the graph stock price are kind of high, so we're going to fix that. We do so by going down here to the risk graph settings table, where we have a number of options we can play with. But right here, we're going to change our settings to 55 and 75. We're going to cause our risk graph to refresh. And we get the graphics with those new settings. Now, the trade has not yet been saved, and that's what this save button here is for. And we're now going to save the trade. You can choose the folder you'd like to save it in. It happens to already be set to Open Trades, which is the one I want. And we now click the Save button. The trade is not saved until you click the Save button. Even though I've refreshed the page and click the Risk Graph plus button, you have to click the Save button. Now that the trade's been saved, we have many more options that handle this trade. We can edit it, we can close it, we can clone it. When you clone it, you make 2 independent copies that no longer are attached to each other. We can set some alerts, which will turn on some output on the home page if certain events that we set happen. We can adjust the trade using the adjuster, and we can delete the trade. The green buttons all apply to the current trade shown in the top box here, which is the one we've selected. The purple buttons shown on the right apply to something else that we might select in the trade selector. So for example, if I was to select the JP Morgan trade and then click the purple risk graph plus, the page would refresh with a risk graph analysis of the JP Morgan trade. But we're going to stick with our trade. And now we're going to move forward in time to see what happened to our trade after June 4th. Let's move 1, 2, 3 weeks into the future from where this trade was started to June 25th. Well, after the call option was purchased, Johnson & Johnson had a nice recovery and has kind of stalled right around 66. Our trade is currently showing a profit of around $750. You can see that profit by where the blue line in the risk graph, which is passing through the stock close, intersects the red line on the risk graph, $750. The red line is today's risk graphics. The blue line is the risk graphics 1/3 of the way into the future from now to expiration. The green line is 2/3 of the way into the future from now from expiration, and the black line is what will happen to our trade when the trade expires on July 20th, 2012. Well, we're sitting on our profits and we're wondering possibly if we should get out of the trade or should we adjust the trade. And we're going to adjust the trade. To do so, we could go into Trade Adjuster, but I'm simply going to edit the trade. Now, there's a number of ways to adjust a trade, and one of them is to go out and buy a put option 1 month after the current expiration date and buy it in the money. So let's try and see what happens when we buy 2 August 12 put options at 70. We leave it at mid-quote and we click Update. When we clicked Update, that added the put trade to our call option. It had a quote of 3.8. Let's color this one blue, and we'll color this one orange to indicate that they're different. Now we have to click Update to save this. So now we have our original call option with an adjustment. Let's risk graph it. Our current profits stayed the same. That's because we have just entered the put option. Nothing has happened to it yet. But look what has happened here. We have a minimum profit of $710. That means that we only had to pay about $44 to get to that put option to protect this trade in case the stock goes down. We're guaranteed right now a minimum profit of $710 when the trade expires at the end of July. Here's what the risk graph looks like. If the stock continues to go up, we will no longer participate in that upward movement until the stock goes up quite a bit. But if the stock goes down, we actually start to make a profit because the put option makes a profit. So we've kind of held on to everything that we have with some slight possibility of increased profits. Moving on to when the trade expires, which is on July 20th. Our profits didn't change much. The profits in our original call leg, however, changed quite a bit. If we wouldn't have adjusted it, we wouldn't have added the insurance to the trade, we would have moved up from $750 to almost $1,164 in profit. We ended up paying $432 to keep those 2 put legs active. And this is what our risk graph looks like. It only has a black line. We are sitting on expiration date. Now we want to close this trade. So I click the Close button. We have 2 options here. The put is actually in August and it has not expired. We could keep the put active and just close the call option. I'm going to close the call option by, if I bought 2 July 12th 57.5 calls, I'm going to sell 2 July 12th 57.5 calls, and I'm selling them at the mid quote. But note that there's quite a bit of variation here. Whether or not I could actually get 11.05 would have remained to be seen, but this is as good as any to keep going. And when I click update, I'm going to click update and I'm going to close the call but not the put. You can have a mixture of open and close legs in a trade. Now when I risk graph the trade, only the put will be left. The other two will get consolidated into their equivalent leg profit of 1174, and they will not be shown. And that's because that this was the kind of feature I selected in general settings to not show closed trade legs. Here's where my trade sits. If Johnson & Johnson moves down from here, I'll start to make a profit in the put option. If it does not, my $700 could get down all the way to $400. But if it does, we have the potential to make more money now on the downside. Well, that's an example of creating a trade, closing a trade, and adjusting a trade using riskgraph++ and the Options Analysis website. Stay tuned for more videos. Look at the ones that are being posted on the login page. Thanks a lot.